Fears of war in the Middle East send financial markets lower. Federal Treasurer Jim Chalmers hints at incentives to boost green manufacturing, and there's a push to cut junk food advertising that could cost the major media companies hundreds of millions of dollars. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 15th of April, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. It's been a very sad weekend for all Australians, really, but particularly those that live in the eastern suburbs of Sydney after that dreadful event over the weekend where those people were killed. And obviously, everyone here at Fear and Greed, we send our condolences to everyone affected by that.
Yeah, well said. It was an absolutely tragic event.
Yeah, absolutely, Michael. When, I repeat, we really do feel for everyone affected by that, directly and indirectly.
Yeah, couldn't agree more, Sean. Now, after the show, you have an interview coming up today with Grady Wolfe, who we've spoken to once before. She's an excellent market analyst at Bell Direct.
She sure is. We ask Grady for her 5 tips of companies that maybe we've heard of, maybe we haven't, that she's looking at for the next 6 to 12 months. Now, turns out a couple of those companies are almost household names, a couple of them aren't. Certainly, it's interesting to get Grady's top 5 tips for 2024. Very, very well worth a listen. If you're an investor, even if you're not an investor, it's still worth a listen, Michael.
Yeah, absolutely. And of course, we're not an investing podcast. You should seek professional advice before making investment decisions. But it's just interesting to hear Grady's ideas. It's really kind of a starting point for your own research, really, isn't it?
Yeah, absolutely.
Now, the main story this morning, Sean, fears of war in the Middle East involving Iran and the US has pushed up oil prices, sent the Aussie dollar lower, and given rise to new threats of inflation, dashing hopes of lower interest rates anytime soon.
More than 200 drones and missiles were launched by Iran at Israel over the weekend, the first direct attack from Iran on Israel. When markets reopen today, oil prices in particular are set to jump pretty sharply. The attacks themselves caused only minimal damage and were made in retaliation for a suspected Israeli strike in Damascus that killed several commanders a few weeks back. Israeli officials said Iran had fired more than 300 projectiles, including 170 drones, 30 cruise missiles and 120 ballistic missiles at Israel. Most of the projectiles were intercepted. US President Joe Biden condemned the unprecedented assault and said that US aircraft and 2 US destroyers, one of which Washington moved to the region over the past week, had helped intercept the barrage. The UK and France also helped ward off the attack. Biden convened other G7 leaders overnight to coordinate a united diplomatic response to Iran's brazen attack. That's what he called it. Following a request from Israel, the UN Security Council also scheduled an emergency meeting overnight to discuss what went on.
Sean, what's the kind of broader context of this in terms of financial markets? Why has this attack from Iran against Israel scared investors so much? And I suppose looking ahead, what will happen when markets open today?
Well, until the weekend, Iran and Israel have avoided direct confrontation, apart from once back in 2018. The UN Secretary General Antonio Guterres came out, along with a bunch of other global leaders from Japan to the UK. They've condemned the bombardment, so it's easy to see where the blame lies in this one. Countries like Saudi Arabia, who aren't natural friends of Israel, they've come out and condemned the attack as well. The US has obviously made it very clear that it's supporting Israel. Iran's a big player in the global oil market, particularly in OPEC. It's also very strategic. That's why traders expect oil prices to surge today, not good for petrol prices in coming days. Higher oil prices will feed through to inflation because they drive up production and transportation costs. They can also drive up expectations for future inflation. Geopolitical uncertainty pushes investors to look for safer assets, so gold should benefit. US dollar-denominated assets should also be in demand, pushing down the value of the Australian dollar. Global equity markets will come in under pressure after a very strong run. Don't expect anything too good over the next day or two. And certainly the run of Bitcoin recently, well, that will certainly come under pressure. So overall, this sort of activity, and particularly the fact that it's a direct attack on Israel by Iran, will send shivers down financial markets.
All right. Now, checking local markets, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. Where did things finish up on Friday, Sean?
Well, the S&P ASX 200 closed down 0.3% to 7,788 points, meaning the benchmark was off for the week. Utilities and tech stocks did best, while consumer companies did worst. Among the large caps, BHP fell more than 1%. Fortescue Metals and Rio also lost ground. Commonwealth Bank, National Australia Bank and ANZ all went backwards, while Westpac was flat. James Hardie Industries had another bad day. Woodside and Santos reversed some of the gains earlier in the week to fall on Friday. Telstra also finished down 1%. Some of the better performers were WiseTech Global and CSL.
Okay, we've got a bit to cover. We'll be back in a moment with the rest of the day's business news. Sean, Federal Treasurer Jim Chalmers has hinted at an overhaul of the tax system in an effort to stimulate green manufacturing industries.
It's really interesting. This Dr. Chalmers said the government is prepared to think about the tax system as a lever to pursue the government's Future Made in Australia strategy. Speaking to ABC's Insiders yesterday, Dr. Chalmers said the tax system will play a part and investment will play a part to incentivise private investment in Australia. The policy will be a pillar of next month's budget, as well as a major feature of any second-term agenda for the Albanese government. It's designed to move Australia up the green supply chain to capitalise on the abundant renewable energy resources in this country, with media reports this morning suggesting it could be some type of business investment allowance. Basically, they want to drive capital, drive investment towards green energy and advanced manufacturing. The government hasn't done much in this area thus far, and many other governments, such as the US, have spent a lot of money in this area. So it's interesting that they're actually starting to put some meat on the bone of what they said last week.
Now, this is an interesting one, Sean. Major media companies already upset at the prospect of losing $300 million in advertising revenue from a government crackdown on gambling advertising now face an even more expensive hit from a possible ban on junk food ads.
The groups representing the multi-billion-dollar television industry and Australia's biggest advertisers have criticised a study that explored banning or significantly limiting unhealthy food promotion as lacking evidence and unfairly targeting marketing over other factors, according to a report in the Financial Review. Now, quick service restaurants, things like McDonald's, Domino's, KFC, those sorts of organisations, they spent $382 million in advertising last year. That is massive. Now, back in 2023, the Albanese government funded a feasibility study by academics from the University of Wollongong on ways to restrict junk food advertising and packaging. The study's suggestions include government intervention to reduce fast food ads, restricting ads on TV between set times such as 5:30am and 11pm, or limiting unhealthy food marketing through online media. This is something that the media industry will fight very, very hard. Already, they are reliant on gaming advertisements. That is going to be reduced if they take out junk food advertising. These guys are going to lose a lot of money.
Yeah, they certainly will. Now, almost 2,000 auctions were held over the past week, but the preliminary clearance rate fell from nearly 76% a week ago to under 73%. And Sean, you heard me stumble over the word preliminary. Usually that's my favourite one to get you to say, because
yes.
it's your verbal Achilles.
Yes, the verbal Achilles, I like that. I'm not
quite
even
fond
going
of
to
that too.
try and say that word. Melbourne hosted most auctions. The clearance rate came in very close to last week, just under 71%. Adelaide was strongest with a preliminary, I think I got it right, preliminary clearance rate of 88%, while Sydney came in at 74%, well down from its 82% a week ago, according to CoreLogic data. Overall, auction clearance rates are running a bit above the long-term average.
I think it's one of those words that you can't think about too much before you say it.
Yeah.
Otherwise you overthink it and you actually psych yourself out. You better just to take it at a run and just roll with it.
Yeah.
And you got it. And then as soon as you slowed it down and tried to spell it out, I'm like, you're going to stumble.
I was in trouble. Yep.
Now, a drop in high rollers meant the Star Entertainment Gaming Group lost money in the March quarter just as it prepares for a second public inquiry into its Sydney operations.
Star told investors it was losing large sums of money from customers visiting premium VIP areas and that monthly operating costs had ballooned as it focused on transforming the business. The company reported a bottom line loss of $7 million for the quarter. It comes ahead of the start of public hearings launched by the New South Wales Independent Casino Commission, in which current and former executives will appear. The hearings will help determine whether Star has reformed enough to regain control of its Sydney casino licence. The group's share price closed down 8% on Friday. It's now less than 20% of its value from October 2021.
Domino's Pizza wants to nearly double the number of its stores in Japan, a market which hasn't been a great performer for the fast food group, and it has a goal to double the number of stores it has across Asia over the next 9 years.
That would take its stores in the region to about 3,000, including 2,000 in Japan. Management also believes there are big opportunities in Germany and France, where the group covers only 30% of the market. Domino's held an investor day on Friday, which wasn't particularly well received, given its share price closed down almost 7%. It's down about 30% this year thus far. Chief Executive Don May has always been a great believer in getting pizzas delivered quickly. According to Domino's, a delivery time of 10 minutes reduces food quality by 2%. If it's 21 minutes, it's off by about 12%. Hence the need to have plenty of stores so that you can deliver pizza fast. Domino believes that half of all retail will eventually be delivered, and the global online food delivery world is growing at about 10% annually.
Remember, we talk about Domino's quite a bit, don't we?
We do.
But we talked about Domino's in February, I think it was, when the stores in Japan had seen a spike, remember, in sales. I think it was up like 7 or 8%. And it was on the back of demand, of all things, for the cheese volcano pizza.
Yes. Yes.
Which just sounds like it's going to go straight for your arteries.
We had a challenge who was going to eat it first. I can say I still haven't had one. Have you?
No, I don't even know if you can get it in Australia. Maybe that's our homework.
Yeah, maybe.
All right, that's my homework for the week. What an assignment. That is a fantastic assignment. Now, higher dividends for building group Boral should be enough to allow Kerry Stokes and his Seven Group to buy out minority interests in the company after independent directors backed a $1.9 billion offer.
Now, Seven Group made an initial offer, which was rejected by independent directors, but on Friday, both sides announced that Boral will pay a fully franked dividend of 26 cents on April 26. Seven will then pay a one-off dividend of 30 cents once the deal is done, providing extra incentive for Boral shareholders to accept the cash and scrip offer. Seven Group already owns 78.8% of the company. The latest dividend play has convinced Boral's independent bid response committee to recommend the offer. Independent expert Grant Samuel, which has come under fire for its valuation of the offer. Well, it said the new deal was reasonable, I think was the word they used. Looks like Seven will soon fully own Boral.
And one more before we get to international news. Online fashion retailer Satire has released surprisingly strong third quarter sales growth, though its share price ended the day on Friday quite a bit lower.
The luxury e-commerce retailer said sales for the March quarter were up 88% on a year ago, and the number of active customers has increased to 644,000. Satire also confirmed that its launch in China will happen before the end of the financial year. Now, Satire's been under attack about whether it's complying with its sales tax obligations in the US. That follows an investigation by the Financial Review about the duties it was paying, or it is paying. Shares in Satire have slid 30% since early March when the articles were first published. In response, Satire changed its online checkout model to include duties in the price of its goods, though it just doesn't seem that investors are fully convinced that it's addressed the issue.
Okay, turning to international news now, and former US President Donald Trump has attacked his one-time lawyer Michael Cohen, testing the limits of a gag order that bars him from making public statements about witnesses concerning their testimony in his criminal trial starting tonight in New York.
Yes, testing the limits of a gag order. I'll tell you what he said, and then you can decide whether that's sort of appropriate, given he has got a gag order on witnesses. So in a post on his Truth Social platform, he wrote, quote, "Has disgraced attorney and felon Michael Cohen been prosecuted for lying all in caps. Only Trump all in caps, only Trump people get prosecuted by this judge and these thugs."
Why? Like, no one's ever gotten in trouble for not saying something. Just stop. Don't risk it.
He's got a gag order on him. It's
Oh,
incredible.
Golly. Anyway.
Cohen's expected to be a key witness for the prosecution at the trial. Jury selection is scheduled for tonight. There won't be anything meaty for a little bit yet. It will be the first criminal trial ever of a former American president. Prosecutors have accused Trump of falsifying business records to hide a $130,000 payment to porn star Stormy Daniels ahead of the 2016 election. The allegation was to buy her silence about an alleged sexual encounter with Trump.
And a former interpreter for Los Angeles Dodgers baseball player Shohei Ohtani has been charged with bank fraud and accused of stealing more than $16 million from the athlete to make thousands of illegal sports bets.
Yeah, so Mr. Ohtani's the hottest thing in baseball. He's a pitcher and a hitter. He recently signed a $700 million contract with the Dodgers. We talked about that a few weeks back. A so-called close friend of the Dodgers superstar, Ippei Mizuhara, admitted to stealing from him by hijacking his account and impersonating him with bank staff to feed a voracious gambling habit, US Justice Department and Internal Revenue Service officials said. There's no evidence that the 29-year-old pitcher authorised the transfers, they said, adding that he's fully cooperated with the investigation. Records reflect about 19,000 wagers made between late 2021 and January this year, with roughly 25 bets a day on average. They ranged from about $10 to $160,000, with an average bet of about $12,800. That in itself is astounding. But what I love about this story is Shohei Ohtani himself said, well, I knew nothing about it. So the guy somehow got $16 million out of his account, but he's been paid that much money. He had no idea. And there's no suggestion he did know, so let's put that up front. But it's just, I think it's quite hilarious. You can lose $16 million from your account over a couple of years.
Not actually realise.
There you go.
Oh, what a position to be in. All right. Now, Sean, up next is the Fear and Greed Daily Interview. You're speaking with Grady Wolfe, market analyst at Bell Direct.
Yes, Grady gives us her 5 tips for 2024. Definitely worth a listen.
Yeah, certainly is. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And of course, today is Monday, which means there is a new episode of Fear and Greed the week ahead with our resident economist, Stephen Koukoulas.
Yes, there sure is. We talk about the labour force numbers that are out later this week. Very important because that last reading was, I think the unemployment rate fell down to 3.7%. There's a massive jump in new jobs. We think that will be, well, Stephen thinks this will be reversed somewhat, but that labour market's very tricky to read at the moment. Anyway, we talked to him all about that.
Yeah, there's some good listening for you Monday. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 15th of April, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.